So much momentum on these treasury companies. It's heating up quickly. And I wouldn't be surprised to see over 100 billion deployed by these companies, including MicroStrategy this year. It's going to be hugely impactful.
What do you think about demand? You could sort these leveraged Bitcoin equities are essentially a way to get exposure to Bitcoin in a leveraged way. What's the demand for the number of companies? I guess how many companies can actually run this strategy to satisfy the demand for leveraged Bitcoin equity and the associated financial products that come with it?
It's a big question. I think we're going to see it answered over the next 12 to 18 months. I think on this show, Steven and I were batting around the idea. I think we just arbitrarily chose a number and we said 100. Are there going to be more than 100 publicly traded companies who actually do the leveraged Bitcoin equity strategy? That means not just convert a little bit of your treasury into Bitcoin. That means you're tapping the debt and equity capital markets to some extent to acquire more Bitcoin. I think Steven took the side that he thinks there will be over 100. I said it'll probably be in the dozens. So I took the under, but I'll be happy to be proven wrong on that one. So we'll see.
Is this just a giant speculative attack? Is that what's happening here? There's so much fiat out there that will want to get into Bitcoin that are structurally not able to at the moment. That's the arbitrage that Saylor has been exploiting for the past 4 years. Fixed income assets, bonds, etc. They can't get access to this asset for various structural rules around what kind of assets they can own, etc. Is that the correct understanding? And that there's just all this capital out there that wants to get into Bitcoin, and this is the only way they can. The question is, how much capital is out there? What's in the bond market? What's the demand, right? And these instruments that Strategy has created, very innovative, new things, 0 to 1 moment for this kind of financial instrument backed by Bitcoin. They're seeing incredible demand coming in. They've been able to stack over 500,000 Bitcoin over the past 4 years with this. So how much is out there? They're also returning, great returns, right? Like the kind of returns on debt issuance that you don't see anywhere else.
Absolutely. Yeah, no, I think it is a giant speculative attack, and I think there's a lot of angles. Also, shout out Zach Koons. Great to see you on the show, man. Thanks for tuning in. I think there's a lot of demand. I think there's a lot of capital that's locked up. I think there's a lot of capital that can't access Bitcoin. I think there's bond funds, there's emerging market funds, there's very specific targeted funds, there's venture capital funds, private equity funds. Like all of these pools of capital can only access specific instruments. I think most capital can't buy Bitcoin. And this is doubly true when you get to international markets. You get to the Metaplanet story was that it's very difficult for most people in Japan to get exposure to certain things. Some of these plays that are spinning up around the world. It's difficult for investors in a number of these markets. What people don't understand is even if you can buy Bitcoin in some of these countries, Bitcoin may be taxed more heavily. You may have to pay excessive transaction fees. It may have a different capital gains rate tax as well as others. It may fall under a different regime. You may have a hard time accessing the ability to buy it, and you may have a limited exposure to US equities. So there's all of these limitations that people truly don't grasp. And that's also true within the US in different pools of capital, bond funds, PE funds, emerging market funds, resource funds, natural, blah, 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 blah. Like it goes on forever. These companies are unlocking pools of capital to get Bitcoin exposure. Full stop. There'll be a lot of them.
I think there's so many different ways to summarize this and condense what's happening here. Adam Back had a really good one that we might show here in a second. But yeah, like one of the most succinct ways I could think to say it myself before we go to the Adam Back tweet here is it's taking the fact that there are tons of pools of capital out there that have different investor mandates, but also risk appetites. And they want exposure to Bitcoin, and spot Bitcoin just does not do it for them based on their mandate. Mandate means what they're allowed to invest in. And then risk appetite means what risk they can take on the upside or the downside. And MicroStrategy and all these other leveraged Bitcoin equities are saying, hey, you want Bitcoin exposure, but spot Bitcoin doesn't work for you. We'll get the spot Bitcoin exposure. You get the type of risk and type of security that you're looking for. That's how I would somewhat succinctly describe it. But Adam, back to your, I thought this was a really good one. It's from a month or so ago. MicroStrategy and other treasury companies are an arbitrage on the dislocation between the Bitcoin future and today's fiat world. A sustainable and scalable 100 to 200 trillion trade front-running hyper-Bitcoinization, scalable enough for most big listed companies to move to BTC Treasury. Like I said, there's a lot of different ways to describe what is actually happening with these companies acquiring Bitcoin, and that's another good one from Adam back there.
Yeah, I really agree with Adam. Let's run it back. I think he's got it directly on point there.
Absolute legend. Cited in the white paper, created the precursor to Bitcoin's proof of work.
Oh. And he's still here, posting on Twitter with the rest of us.
That's right.
Every day, Twitter, X.com, whatever you want to call it. It is like the choice jewel of billionaires. Billionaires could spend their day doing anything, but they choose to post because it is one of the finest pleasures in life.
It is true. And he's been working on this since the 80s, guys. eCash has some of the pieces of Bitcoin's system. It goes way back, right? Like Satoshi didn't invent all of it. He pulled from a lot of pieces, including reusable proof of work made by Adam Back. And he's been on that cypherpunk list where all of those ideas been discussed for such a long time. Absolute legend. He's here hanging out, super humble guy. If you ever get a chance to see him, if you're going to Vegas, for instance, and you see him around, just go up and say hi and say thank you. Really cool dude.
Can I address one question that just popped into the chat here? Why don't you recommend individuals use a mini version of MSTR to loan against their Bitcoin to buy more instead of only HODL? I think this is a really interesting question. I think people can do versions of this, but what you have to remember is that you're not going to be able to borrow and tap debt and equity capital markets on the same terms and timeline that a $100 billion company can. So for example, the typical Bitcoin-backed loan, you pledge your Bitcoin as collateral that you could get liquidated. That's not how Saylor does it. Saylor is not worrying about the price falling overnight because he gets a margin call and gets liquidated. He has it's been said many times, but the way the Saylor strategy fails is Bitcoin has like an 80% drawdown and stays there for 4 to 5 years. When an individual gets liquidity against their Bitcoin, it's not the same terms. You can't issue a 0% convertible bond that doesn't mature for 4 years. Right. Your interest rate, that they range anywhere like 9 to 15%. That's not that great of an interest rate. You also have to be monitoring the term the whole time to make sure the price doesn't fall too much because you have to add more collateral. I'm not saying don't do it. I think people could do it and be successful. You're just not going to be able to pull it off in the same way and with the same limited risk that MSTR would.
Absolutely.
Yep. Yeah, I think the personal loans, just review things very carefully. Personal responsibility is really important on this front. Make sure you understand the terms, understand the risks, where you might be liquidated or margin called, etc. Make sure you have enough Bitcoin to throw down to additional collateral if you need to. But it is, I think, a good tool if used right to get access to cash and use your Bitcoin, keep your Bitcoin, leverage your Bitcoin to get access to cash for a short term.
Also, for our Swan private clients, we actually have a great lending product that recently became available at lower rates for the market. So if you're a private client, you're part of Swan Private, and you're looking to access liquidity based off your coins, we do have the ability to do that now. Just reach out to your rep or to support.
Awesome.
Shout out Cody in the chat. Great to see you, man. Thanks for tuning in.
We've got a nice clip here from our new CIO, Ben Workman. It's awesome to be working with him, working with the Workman in Slack and seeing him around. He's been all over the place representing Swan over the past month and doing a great job. A lot of you might know him from MSTR True North and Hurdle Rate podcast. Hangs out with Punter Jeff and those guys. So this is an interesting clip. I thought we could riff on it for a little bit. Here we go.
Now is highlighting the companies that have fallen into that trap, that are sitting idle, that are sitting stagnant, because now investors and also employees are finding out that there's a way where you can reignite your company and you can find a way to bring more value to your shareholders. And it takes one simple change, and that's that you reevaluate your treasury, right? You open your eyes to the opportunities that are in front of you, and you act with a little bit of courage that makes you actually take those opportunities and take a chance. Because if you're already not generating any value for your shareholders and for your employees, then who are you really serving as management? I think that it's going to become so loud that these companies are going to get put under another lens where they're going to have to start answering those questions and saying we maintained and we incrementally got our revenues up because we adjusted for CPI or whatever it is. That's not going to fly anymore, because there are ways that are easily accessible where you can unlock that value for everyone in your ecosystem. And I think it's about time that these executives get pressure put on them to start answering those questions. And I think that's coming quicker than most of them are going to be comfortable with.
It's almost kind of uncanny valley seeing him not in the basement.
That's right. Yeah. I think this is just another instance of game theory playing out, right? This is like a Bitcoin Treasury game theory where as we pick up momentum and more companies are doing this, and I'm not talking necessarily here about the leverage Bitcoin equity strategy. I'm talking about putting Bitcoin on your balance sheet, right? And to make better use of your cash and grow the business again so that you can get access to, you don't just have to turn profits based on business activities. You can put Bitcoin on your balance sheet and benefit from the adoption of this new asset over the next 10, 20 years, right? You could be an early adopter as a company. And so this is a new sort of game theory, a sub game theory, a niche game theory playing out in my mind. And this is what Ben's talking about. This pressure is going to be put on these business operators to get Bitcoin on the Treasury, for God's sake. Like, why haven't you done that yet? It's going to become seen as a business best practice to put money in your Treasury.
You're responsible not to do it.
Yeah, exactly.
Absolutely. It's going to be a huge theme this year. I think over the next 6 months, the corporate adoption is here. It's accelerating. It's big. I've heard a lot of things from people working in the institutional segment along BitGo, Galaxy, NYDIG, just people exposed to those sides of the market. There's so much movement happening.
And 500 billion earlier, the Vibes Capital estimate.
Exactly.
For Bitcoin Treasury demand.
We've run some very sophisticated vibes-based analysis and expect something around the zone.
That's like a midterm projection.
Yeah.
Long term, Adam Back said $100 to $200 trillion long term.
We're just thinking this year. And actually, there's something notable. According to Alex Thorne, is extremely bullish right now. So that's good.
That's all I need to know.
That's noteworthy.
I'll rest easy tonight.
Yeah.
Yeah.
Yeah, I would just say there's like a big question about, I totally agree with what Ben said, but it's leading to this big question of, is this going to turn into a mania, the corporate adoption? Are businesses going to get stupid with the way they're executing the strategy? Is it going to lead to a blow off top? Is it going to lead to a prolonged bear market in Bitcoin at some point in the next, 1 to 3 years? All good questions. People can differ with their opinions on it. I would say, at least for now, there has not been a company that has laid out their strategy for this and has made people say, oh my gosh, what are you doing? This is beyond stupid. You're taking the wrong kind of leverage, et cetera, et cetera. So most of the companies doing this, or maybe all, have been prudent so far. So it remains to be seen if it's going to get into a FOMO YOLO type of blow off top. But that's something people are talking about. But again, I don't think there's any signs of it. People are just giving warnings for it.
Yeah. I think there's no signs of it currently. No one's levered in that way, but there's obviously you could expect that might be something that happens. It's something you need to keep an eye for, but it's not here today.
Something that I noticed about a couple of these companies that have been announced recently is a lack of lockups for earlier shareholders, pre-public listing shareholders. Does that concern you guys at all?
I think it's more so a question of what were the motivations and intentions of the people who struck the deal? Are they in it for the long term? Is it more of a short-term trade, so to speak, for them? But I don't think that necessarily is something that's bad for the Bitcoin price. Like, to me, they're still going to acquire Bitcoin. Maybe their MNAV pops on the open and they sell their shares. Okay, fine. We can talk about the ethics of that and whether that's really the right thing. But that to me is not going to cause that's not going to materially affect the Bitcoin price, I guess is what I'm saying.
I also would be curious where some of it's coming from, because I've reviewed a number of these and I haven't found anything yet that had no lockup on insiders.
Oh,
So
okay.
I'm a
Could
little
be
like,
wrong.
no, you're good. And I've heard other people say it, so I'm not even saying that specifically for you. I think there's a difference between, I think people are getting confused, like a lockup on capital providers that are funding the deal versus like key insiders.
Got it.
I have seen stuff without lockups on like the capital that's coming in, but I've never found something without the CEO or the insiders.
Yeah, no, I agree. I was talking mostly about the capital coming in. I was just and the concern I've seen is that this could lead to dumping toward the first month or two of the stock's listing, and maybe difficult for early retail investors once the stock's listed.
It's possible. It's possible for sure. But I also think it's just because I've seen a few of these, been interested in the space. And I almost imagine you would see much worse initial performance if that was happening. I think it's actually remarkable. You can look across the tickers. And I think you start to be a lot more worried about that when they're just all like down 80% from listing or something. But so far, not so much what we're seeing. Could we see that later on, or could we see that at a future point? When you start seeing that, that's when I think you get concerned on it.